what do we make of these numbers from Lowe's? This morning, the home improvement retailer reported an 11-cent earnings beat, higher than expected sales and better than feared same-store sales. However, Lowe's merely maintained its full-year forecast, and management gave some tepid commentary about weakness in do-it-yourself home improvement projects, ones that I alluded to at the top of the show, which is ultimately why the stock tumbled almost 2%. So I got to wonder, did the market ever react to what I thought was otherwise a pretty decent quarter? Earlier today, we got a chance to dig deeper with Marvin Ellison. He's the president, chairman, and CEO of Lowe's. So take a look. Marvin, welcome back to Mad Money.
Thank you, James. Great to be with you.
Now, I've got to tell you, Marvin, I got up, I get your email, and I look at things. I say, well, this stock's going to be up nicely. It is up nicely. Then it goes down. Let me tell you, I think the first reaction was right. I'll give you why. You exuded a sense of optimism and a belief about both the consumer and the, let's say, the professional that we didn't hear at a competitor. And I think that what I'm seeing is a great progression, and that eventually, when things get better, that inflection is hit. You're going to crush it. Tell me I'm wrong.
Well, Jim, that's our belief. We've been investing billions in our business so that we can not only weather the near term, but we can grow our business when the market improves. Look, for the quarter, we delivered $21 billion in sales. We grew our pro business mid-single digits. We grew our online business positive. We delivered positive comps in lawn and garden. Building materials, we reduced our inventory by $1.8 billion, generated $3.9 billion in free cash flow, and we returned $1.4 billion to our shareholders in the quarter. But more importantly, 93% of our stores, which includes all of our hourly associates in those stores, qualify for our quarterly profit-sharing bonus. So not only did we have a good quarter in a tough environment, but we rewarded the most valued associates we have, those men and women working in our stores and distribution centers. So we're not looking at the market, trying to determine our success based on how our shares trade on a daily basis. We look at the last 5 years, and we feel great about the value we return to our shareholders. We're going to continue to invest, continue to leverage our great balance sheet, and we're going to be great in a tough environment. We'll be even better when the macro turns.
Okay, well, let's go over the switch that needs to happen, the so-called inflection. Your excellent CFO, Brandon Sink, does say that, look, we're not seeing that inflection point yet. Consumers remain sidelined. Marvin, what's going to take it so that you do kick up to the next level?
Well, Jim, I think this is a product of customers and consumers just waiting to see what's going to happen next. Look, if you think about just the housing data for a second, and you think about kind of what is available, you have $33 trillion in equity available that's been accumulated, in the current state of housing. You right now have 90% of the homeowners out there that either own their homes outright or they have a fixed mortgage rate, and the average mortgage rate in the U.S. is 3.8%. And so right now, customers, have equity in their home, roughly 40% appreciated since pre-pandemic. They have low rates. They have disposable income to spend. I just think they're cautious based on the interest rate environment and the inflationary environment, and they're just waiting. So for us, Jim, we can't time the inflection point, but what we can do is invest in our business, make sure that we are ready to perform irrespective of the macro environment. But more importantly, we know that all macroeconomic cycles are cyclical. They go up and they go down, and we're preparing to be at our best when the cycle turns up, and we know that's going to happen. And when it happens, we're going to take meaningful market share based on the work and the investments we put into the business.
Well, I think this is a great point, because there's a moment in the conference call where I was concerned about directly that you addressed. I figured you've been there for 5 years. I watched what you've done, okay, for 5 years of the technology revolution. Let's put it that way. And I thought you were over. I didn't know what more you could do. And then it turns out, you had 30 years of a not great customer relationship. You've got this Milo's Rewards. This is from March. Give us an early indication through SpringFest what Milo's, what is the rewards program meant?
So for some context, Jim, and you know this, roughly 70+% of our customer base is do-it-yourself. Right. And so we're designing a loyalty and rewards program to reward these do-it-yourself customers. And so we focus in the March rollout on enrollment, on engaging active members, and driving app downloads. We've been extremely pleased with the early response. And the goal is simple. We want to drive one additional trip from our DIY customers to our stores throughout the year. That within itself, from a financial perspective, pays for this program plus, much, much more. And so the program allows, rewards members to earn points toward Lowe's Money. It provides free standard shipping, other benefits and gifts. And if you are a Lowe's Rewards credit card holder, you get 5% off of purchases on a daily basis. And so look, you and I know that data is the new currency. Right. And we want to take the data that we are accumulating with this new loyalty platform. We want to use it to create a better customer environment, both in-store and online. But we also want to personalize our offers and create an environment where these customers choose us over other competitors in the market space. So what I will tell you, it's early, and you know that reward programs are designed to accumulate information and drive, multiple trips throughout, a period of time. And we're really, really pleased with the early results. And we think this is going to pay big dividends for us over the long term.
Got to believe it. 5% off daily is not bad. Now, I know these bigger tickets, immersion, kitchen design. Previous quarter, you talked about how Vision Pro is going to help. Yes, data is the currency. And the data that comes from Vision Pro, is it working for you?
It's absolutely working. And more importantly, Jim, it's giving us the ability to attract, great technology partners who want to do business with us. They want to innovate with us, and they want to be part of our strategic plan. So, Vision Pro is a great partnership, with Apple. We've had great work with NVIDIA on AI and AI technology that we're using within our store. And so we're just excited about all the possibilities that's in front of us. We have 50 plus active AI models. We have used it for sourcing logic, inventory planning, pricing. Our focus is on creating an environment that's easier to sell, shop, and work. And we're one of the first in our industry to have a custom chat GPT plugin that allows customers to get assistance with a difficult home improvement project, and they can do it online by leveraging this custom, chat GPT plugin that we've developed. So there are just so many things that we're doing in addition to Vision Pro that's creating an innovative environment. And Jim, let me take you back 5 years ago. We couldn't even give customers an e-receipt.
I know.
And so, so you think about where we've come from that really what I call prehistoric time to now partnering with Apple, partnering with NVIDIA, partnering with some of the best technology minds in the world. And we're excited about what's to come. But we know that these partnerships will create incredible value and incredible differentiation over time.
All right, last question, Marvin. When I go to your store in Riverhead this weekend, because I want to get my tomato baskets, what else should I be looking at that other people are buying that I should put in my cart?
Well, Jim, I love innovation. And look, we got great innovation, and customers are still paying for innovation. We get the backdrop that discretionary DIY is down on the big ticket, right. And that's true. But Toro launched a Smart Store More for people in urban spaces that you don't have a lot of area to store more. You can reduce the storage space by 70% because it stands up and has proprietary, patented technology that keeps the oil from leaking. If you're an electrician and you want to have a quick water heater installed, A.O. Smith has a 120-volt plug-in water heater that goes into an outlet on the wall. I mean, Klein Tools, the #1 tool brand, right, for electricians and HVAC professionals. I mean, have great technology. But I think for you, Jim, you're an avid gardener, and we have the best garden business of any retailer in this space. And we've done an incredible job, not only with battery outdoor power with our partnership with Ego, but the launch of Toro in our business gave us incredible strength on battery and gas. So anything you need for your garden, whether it be plants or whether it be outdoor power equipment, we are best in class in providing that to you and to all of our avid customers that want to do work on the outside.
Well, I look forward to that and look forward to getting my 5% off. And I want to thank you very much, Marvin Ellison, President, Chairman, and CEO of Lowe's. Marvin, I love it when you come on the show. Thank you so much.
Jim, great to be with you. And look, for all of the people shopping our stores, when you see an associate wearing a camouflage vest, that reflects an associate who is either current or past military service. And so make sure you stop for Memorial Weekend, shake their hand, and thank them for their service. We have over 26,000 associates that are current or former military working for us, and we're proud to say that they're members of our team, and we're proud of the service that they gave to make this a great country.
I can't wait to say thank you to them. Marvin Ellison, thank you for coming on Mad Money.
Always great to be with you, Tim.
And Mike's back in.
Coming up, no traction in tractors? Cramer digs into what's gone rotten with Deere. Next. Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.